Hi there! This video you're watching is part of the series from Ultimate Investing called UI Goes Deep, where we deep dive into a company in one of the growing trends. Let's begin! Alright, so in today's deep dive, we're going to talk about what is cloud. To discuss about a cloud company, we first need to understand what is cloud, and then we'll go on to talk about this company, which I shall not review for now, what it does and how it makes money. Then we look at the cloud trends for 2021 and beyond and have a perspective on whether this company can continue to thrive or grow in the increasingly saturated cloud space. Finally, we look at the numbers of this company and determine whether this company is still healthy or not. And then we have a look at what I call its pulse, which is basically the chart, also known as technical analysis, and determine if there is an entry opportunity. So, what is this company that we're going to talk about? It is none other than VMware. My guess is most of you have already heard of VMware and perhaps also use it in your line of work. But what does it truly do? So let's go on to understand more about VMware in this UI Goes Deep series. When VMware is mentioned, most would probably link it to things like data centers, virtualization, x86 servers, or at most, you will know it as cloud-related company. All of this is true, but technicalities aside, what VMware is really trying to market itself to business is all about experience. What does that mean? So if you are a bank, VMware helps you safeguard your customers' hard-earned money and create a safe, smooth, secure and better banking experience. If you are a hospital, VMware enables doctors and medical personnel to truly cater to patients by having access to the same patient records from any device, anytime, anywhere. Now it's really about end-user experience for VMware customers, even though VMware is a technical company to speak of. Without going into technical details, I will try to share what VMware does. But first, let us understand what is cloud. Actually, cloud is the internet. Think of Netflix. Where do you think all the films are being stored? Yes, in the cloud, which is really a server somewhere on earth. So when we say businesses are moving to cloud, they are really moving their business data and activities to the internet so that they can achieve efficiency, flexibility, and cost savings. And VMware can help them with that. Think of VMware as the architect, the enabler, and the nuts and bolts provider so that businesses can be on cloud. That's what they do. And in case you haven't already known, the cloud is really as vast as the sky. Now look at this cloud space, and actually there are still many more companies not in it yet. So you have the infrastructure part, which is largely things about database, network, storage, and also the artificial intelligence part. And then all your apps like Salesforce. Okay, it's okay if you can't see any of those in the picture that I'm showing. That is not the point. Where does VMware fit in then? It's somewhere here and somewhere around here. Wait a minute, doesn't this look like Find Wall-E? Okay, jokes aside. To put it simply, VMware is more cloud infrastructure related. They give cloud the backbone it needs for the services to be delivered over the internet. It's a huge cloudy world, isn't it? But when we talk about cloud, we cannot neglect the top 3 cloud service providers in the market, and they are none other than Amazon Web Services, Microsoft Azure, and Google Cloud Platform. Some have compared VMware against AWS, and even VMware themselves acknowledges that Amazon Web Services could threaten their existence. AWS, with around 1/3 of the market share in the late 2020, has always been leading and still is in terms of the market share, followed by Microsoft Azure and then Google Cloud, where both joined the cloud space later than AWS, approximately 7 years later. However, Microsoft has been playing catch-up quite well, and market share for Microsoft have been creeping up. Okay, then where does VMware fit into the picture? To gain some perspective on it, first we got to understand how is VMware different from AWS, Microsoft, and Google Cloud in the cloud playing field. A significant portion of VMware revenue does not come from being a public cloud service provider like the 3R. VMware's success so far has come from a single software known as the hypervisor that enables server virtualization. Virtualization, to put it simply, is the creation of, you guessed it, virtual environments. As there is increasing enterprises that needs to move to a hybrid cloud model, which is public plus private, the workloads or virtual machines cannot be simply transferred to the public cloud space. And so, what VMware does is a partnership with AWS, Microsoft, and Google to allow the VMware workload to run on public cloud without re-architecting. So in that sense, VMware is not really competing in terms of providing public cloud infrastructure, even though it does have such an offering called vCloud Air. Having said that, VMware has acknowledged Microsoft to be a likely competitor due to one distinct advantage that Microsoft has, and that is a lot of corporations are already functioning on Microsoft, and it may make more sense to run apps in Azure where the base is already Microsoft. And then VMware has another core domain, which is the hyper-converged infrastructure, one of the facets of the cloud space. But what is hyper-converged infrastructure and why is it such a big thing for VMware? Let me attempt to explain using examples that we can relate to in our day-to-day life. Well, before the cloud era, you had to use physical hard disks to store all your files, photos, and media. So if you have a second home, you have to bring the laptop and the hard disk to your second home so you can continue your computing work from wherever you left off. It is cumbersome, but that was the best we could do at that time. Then came the cloud. The cloud holds all your files, photos, and media. There is an actual server somewhere that holds all your documents, which before were stored in your physical hard disk. Now, with any device you have, as long as you're connected to the internet, you can access all of your documents, no matter where you are. Just think about OneDrive. You no longer have to bother about physical hardware, like your hard disk for storage. Now let's take a look at VMware's closest competitor, also in the hyper-converged infrastructure area, and also doing what VMware is doing. In terms of market share, Nutanix is still a far cry from VMware's 42.4%, and Nutanix represents only half that of VMware's share. Compared to the previous year, VMware has increased its market share from 41.5% to 42.4%, whereas Nutanix has dropped a little, 0.4%. So based on this, we can see that VMware is still leading strong in one of its core business, the hyper-converged infrastructure area. Though VMware is standing strong, can it continue to thrive in the cloud space? We can't say for sure, but we can gather some clues from the Cloud Trend 2021 onwards and what VMware plans are, whether it is equipped to move with change or remain status quo. Now, while gathering what the emerging cloud trends are, I noticed 3 common areas highlighted by the industry experts. Let's have a look at what the 3 are. In a Forbes article, it was mentioned that moving forward, hybrid cloud model would be gaining popularity, and a similar observation was mentioned in crn.com. Also in IBM's blog, it says that organizations do have plans to move to a hybrid cloud model, which is a combination of your private and public cloud. So trend number 1, seeking more and more automation and the need for infrastructure compatibility. In the same articles, machine learning tools available through the cloud service was highlighted as one cloud trend to look out for. Now with cloud, AI services are readily available to enterprises of any size. Plus 5G and edge computing, AI will enable cloud to perform more effectively and efficiently. Simply put, AI will improve cloud-related tasks and make it faster, smarter, and more valuable. And so, cloud trend number 2, artificial intelligence for the data centers. With so much heavy lifting done in cloud, it is not surprising that data governance and security will be one of the key focus for many companies that are already in cloud or moving on to cloud. So, cloud trend number 3, data and security. These are the 3 common cloud trends that industry experts believe to be a huge driver of cloud revenue. And question is VMware in alignment with the trend? I have not found anything that specifically outlines VMware's direction, but they have taken some actions that could pretty much let us guess where their area of focus are. From 2018 through 2020, they have embarked on a series of merger and acquisition. So looking at what they have bought, they seem to be focusing in the area of automation, security, networking, and mobility. Well, it does seem like VMware is largely in alignment with the 3 cloud trends we've identified earlier on. Now we can go on to see if VMware is performing well in terms of numbers. Some of the things we check: increasing revenue, positive EPS, growing free cash flow, net margin more than 10%, ROE greater than 15%, and finally, interest coverage more than 3 times, or debt over equity less than 0.5. Revenue have been increasing for VMware, that is a good sign. Earnings per share as well increasing year on year and is in the positive zone, that is also a very good sign. And then its net margin is, at least for the trailing 12 months, it's 13.76, which is greater than the 10% that we are looking for, ROE greater than 15%, and interest coverage more than 3. So all of this is a pass. Now for the debt to equity ratio, it does seem like it's a little high, but that's okay because our interest coverage is more than 3 times. This just means that VMware has enough to repay its interest on its debt. And then in terms of free cash flow, 8.44, it has positive free cash flow as well, so that is a good sign. Now putting everything together, it looks like VMware is doing very well. What about its valuation? For that, we use EPS growth in the 3, 5, and 10 years average. The EPS growth for VMware is greater than 40%, which is great. But which value do we take for valuation? Industry estimate growth for the cloud infrastructure service to be approximately 27%, and this is from statistica.com. Looking at the EPS growth pattern of VMW, I'm comfortable to give it a future growth of 22%, being more on the conservative side. So to calculate if it's undervalue or overvalue, we use PEG, which is price earnings divided by growth. In our case, we use EPS growth. So price earnings of 37.7 divided by 22 is equals to 1.71, and this gives you a PEG of less than 2, which means at the current price of BMW, it is currently undervalued. When it comes to the challenges that VMware will be facing, I think there are 2 points. One is that as more and more company migrates to the cloud, the demand for physical server for virtualization will slow down, and server actually occupies a significant portion of VMware's revenue. So even though VMware is improving their cloud products, it could still take an impact as server virtualization starts to mature in the market. Also, we cannot underestimate what the big players like AWS, Microsoft Azure, and Google Cloud can do to take away VMW's market share. Having said that, I still believe that VMware is poised to continue its leadership in the cloud infrastructure space for reasons such as, number 1, vendor lock-in. Companies do not want to have only one source for their cloud needs, as that may be a risk for them. And so this means that there is a slice of pie for everyone. Reason number 2. For the 5th time in a row, VMware is named the leader in virtual client computing. There must be something that they are doing right, and they are the trusted partner to do it. When it comes to technology infrastructure, it is extremely painful to change course once being set up. Would you rather do it as right as possible the first time round, by entrusting the job to a more assured and trusted name, or some other player? I think the answer is clear. However, there is a piece of VMW future that is still murky. Although VMware operates very much as a separate and individual entity, 81% of VMware is actually owned by Dell. And only recently, VMW issued a statement about a possible spin-off from Dell's ownership to Dell's shareholder, and this would not happen anytime before September 2021. What this move entails is essentially 2 things. Ownership of VMware will be transferred from Dell to Dell's shareholder, unlocking more value for them because VMware is a money-making asset in Dell's balance sheet. Also, when Dell acquired EMC, which owns VMware, it undertook a huge debt which is to date affecting Dell's credit rating and their ability to loan. So by spinning off VMware, it can transfer those debt to VMware and let VMware take care of the debt. What will happen in the future, we do not know. However, we can base on current events to gain some conclusions. VMware is still a strong company overall, with forward-looking management that is clear of the direction that VMware should be taking. Based on our valuation using PEG, it is currently undervalued. On top of that, I would say that VMW has an advantage in terms of high switching cost. Stability is important to an enterprise, and looking to switch vendor would usually be their last resort, as that could potentially impact business operations. It's just like setting up your house. Once done, you wouldn't want to move again. Well, at least anytime soon. So VMW does look attractive at this point of time. Now let's look at the chart. Alright, this is the chart of VMware, and as you can see from the chart, VMware has been trading sideways since early May last year, 2020. Looking at the green line, which is the EMA 200, it has been relatively flat and there is no true direction. So just a few days back, VMware price took a dip due to the official news about Pat Gelsinger going over to Intel. So this is one additional uncertainty. However, let's just read VMware based on what we've discussed, and by looking at the chart, you can see that I've drawn 3 black lines known as support and resistance. Around 133.3 is the support, which means the price has a higher chance of rebounding back up around this level and potentially going to the first resistance represented by the middle black line around $146. And if the price breaks through this first resistance, it could move towards the second resistance, which is around 157.23. And again, if the price does break through the second resistance, then it could potentially mean that the price has the strong momentum to move further upwards due to a strong buying force. So in terms of buying and holding the stock for long, we could wait for the EMA 20 to cut 50, to cut above 50, which is the red line, to cut above the blue line, and that would be one entry point. So in terms of trading using options, we could also wait for the same signal, that is when the price rebounds back 20 to cut 50, red cuts blue, and do a buy call. So that would be more of a shorter term trade. Now, VMware is still a fundamentally strong company, so if you are thinking of buying and holding the stock for long, then you could wait for the 20 to cut 50 and enter into the stock. The short-term volatility or rather the price fluctuations, should not be a cause of concern for you because you are investing for a longer time frame. Alright, so there you go. This is VMware Technical Analysis, accurate as of 18 Jan 2021.